Rental vacancies spike as housing crisis eases. This was a direct headline from a Nova Scotia specific news source that I read every morning, and it's been in the headlines in several different news sources earlier this week as CMHC just released their fall rental market report for 2024. Halifax's vacancy rate has climbed above 1% for the first time in over 4 years, which is obviously great news, but don't believe everything you see in the headlines because this doesn't necessarily mean that the Halifax housing crisis is easing up just yet. But just before I get into it, if you're new here, my name is Andrew Stevens. I'm a realtor in Halifax. And if you want to be educated on the Halifax real estate market, then hit that like button and hit that subscribe button. And if you're thinking about buying or selling a home in the HRM and you'd like to get in touch with me, you can reach out to me anytime in the Calendly link below. So the problem with articles like these are that it seems like it's easier to get into housing. And truthfully, it's not really the case. Are we seeing more supply coming to the market with a lot of new builds? Yeah, sure. But we still have a huge lack of affordable supply, which is the biggest problem that we face here in Halifax. Now, before I get into some of the points and talk about this report, I'm curious. If you have tried to find a new rental unit recently, what was your experience like? Comment below. What price point were you looking in and how difficult was it for you to find an apartment? Okay, so Halifax's vacancy rate has climbed to 2.1%, which is the highest it's been in 4 years. But in terms of the affordable price ranges, let's say $1,300 and under, it's still very low. It's still under 1% in these ranges. So yes, we've seen an uptick in vacancies, but a lot of that is going to be the new builds coming to the market, not necessarily affordable price points that most Haligonians are looking in. Okay, so Halifax's vacancy rate climbed to 2.1%, which is the highest it's been in 4 years. However, this hasn't really eased housing affordability. And if you look at affordable units, let's say $1,300 a month or under, that vacancy rate is still under 1%, showing just how competitive it is in these affordable price ranges. The overall rise in vacancy is largely due to a lot of new construction apartments coming to the market and the lack of demand for these sort of luxury units. Let's face it, there's a lot more people looking for affordable units than there are people looking for $3,000 a month apartments. And yes, I've heard some rumblings lately of developers and landlords and property managers trying to get tenants and having a tougher time. However, I would strongly suggest that this is in the higher price ranges rather than the affordable units. And I would suggest that if you're going to put up a 2-bedroom unit for, let's say, $1,400 or $1,500 a month anywhere in Halifax or really anywhere in HRM, you're probably not going to have a very difficult time renting that unit. But yeah, maybe if it was $2,700 a month, you would have a bit of a harder time because the demand for those luxury units is just not really there compared to the affordable housing side of things. And let's face it, if the housing crisis was truly easing up, we probably wouldn't have 1,200 plus homeless people in Halifax right now, and we certainly wouldn't have over 7,000 people on the public housing wait list in the province of Nova Scotia. The average rent for a 2-bedroom apartment in Halifax rose to $1,707 per month, which is up 3.8% from this time last year. However, that's much less growth than we saw the year before, which was at 11% year over year. So that is positive news to see as the rent growth has started to slow down in Halifax. However, our rents remain higher than the national average of $1,447 a month, and this is part of the problem. We have super high rents based on our cost of living here and our low wages here. So for context, the average rent for a 2-bedroom apartment here in Halifax is $1,707 a month. And if I'm comparing this to Toronto, for example, that sits at $1,974 a month. So that gap is not really that big when you consider the difference in pay scale between here and Toronto. All of these things are making the turnover in these affordable units extremely low. And I've talked about this in some of my other videos, but this is because a lot of these lower affordable units are protected by the rent cap. So if you're in an affordable unit, let's say you're paying $1,200 a month for a 2-bedroom unit in Halifax. That would be very low right now on the typical side of the rent prices that we're seeing if you leave that apartment. just because you need more space or a different location or whatever, you are very unlikely to find another apartment at $1,200 a month or anywhere near that. So the rent cap is protecting these people, yes, but it is making the turnover in these units very low. So it's kind of having people stuck in their units if they're affordable because they don't want to leave, because financially speaking, it really doesn't make sense. Now, although supply is certainly still an issue in Halifax, housing construction is at an all-time high. Housing starts are at record levels. However, housing completions, which is really the metric that's going to help the affordability over time, are lagging behind. And this is largely due to a lack of labor in Halifax. Now, this will obviously continue to chip away at the problem, and we need more and more construction more than ever before, but it's going to take some time for all these new housing completions to finally finish, and then it's going to take some time for that to chip away at the problem to actually see a difference in the levels of affordability on the ground level when you're actually out there looking for a new rental unit. There's a reason that all these new apartments are so expensive, and no, it is not because the developer or the landlords are really greedy. Maybe that has something to do with it. Honestly, who knows? But the big thing is that it is expensive to build right now. It is more expensive than ever. Material costs are expensive, that skyrocketed through the pandemic. We have labor shortages. We're seeing a ton of backlog in these builds, and it's taking longer and longer to complete them. And we're seeing higher interest rates for a long period of time, which increases the carrying cost, which is increasing the amount of money it's costing to build these units. Not to mention it's much more expensive to get the land to build on in the first place. So there's a lot of little factors like that that are all contributing to the overall factor of high building costs, which in turn is trickling right down the line to the cost that the tenants are going to pay. Let's not forget, these are private developers that we're talking about. They are in the business of making money. They're not going to rent units for less than what they need to cover their costs at the end of the day when this build is completed. And we, as the consumer, can be mad at that all we want. But the truth is, we need the private market to be building at record levels over a long period of time to make any dent in the levels of affordability overall in Halifax and in the province of Nova Scotia. We simply can't fix this problem without a big boom from the private market. Now, the last thing I want to mention is the overall shift in demand. We're seeing a slowdown in terms of the migration to Nova Scotia, both interprovincially and internationally. And this is having an effect on the overall vacancy rate. Now, if this trend continues, we may continue to see the vacancy rate rising, but I think it'll be mostly due to new apartments hitting the market that are far from affordable to the masses. So again, it's not necessarily helping the levels of affordability. And it's not to say that it doesn't help, because it certainly does help. If you have somebody in a more affordable unit who's looking for maybe a nicer apartment or a better location or a newer building or whatever, maybe they move up into that kind of luxury market, and then that frees up a more affordable unit. However, it's really not the case the way that you think it would be, because the rent cap is in place, but it is released when somebody leaves their unit. So even if somebody's in an affordable unit right now paying $1,300, $1,400, or $1,500 a month, when they leave to go up to that luxury market, that unit that was $1,400 or $1,500 a month may now be $1,800 or $1,900 or $2,000 a month. So it's not to say it's not helping. It is going to help, but it's not going to help, right away, and it's going to take some time to see the levels of affordability increase, because we're going to need a ton of more supply to make this happen. All in all, our rental market is facing serious challenges that are unlikely to get significantly better anytime in the near future, as rents continue to outpace income growth, leaving low-income residents and even average income residents very vulnerable. And although the housing construction has continued to see an increase, and this is very important, it is going to take a long time to get anywhere near a more balanced or a more normal rental market in Halifax. Now, if you're still here watching, you obviously have some interest in this topic, and I'm curious to hear from you. Have you tried to rent an apartment lately? What price range was it in, and what was your experience like? Feel free to comment below. And if you got any value out of this video, all I ask is that you hit that like button and hit that subscribe button so you don't miss any of my future content. And that'll help push this out to more people like you who may be interested in seeing topics about the Halifax and Nova Scotia real estate markets. And until next time, thank you so much for watching. I really appreciate your support. and have a great day.